Hi, Ira Coiner here, President and founder of Triathlon Partners. Thank you very much for tuning into this episode of Triathlon TV. We're going to continue our series on estate planning. Thank you very much. The other two episodes were so well received, and it was a topic I wanted to talk about, and I'm glad I have an opportunity to do that. Now, no matter how hard some people plan for their estate and to avoid or minimize estate taxes, they just can't. It's just impossible sometimes to get everything out. So some things are going to be subject to that 40% tax when you go over that threshold. And those things we find really affect people who own their own businesses, right? Because you have some businesses that are just cash flow businesses that really don't have any assets. But you do have other businesses which just own a ton of assets. Those could be construction companies. They could be factories. They could be someone who owns a lot of property from real estate or just has some land. So a lot of these companies, they can't do anything because these assets, they're just worth a lot of money. So what do we try to do to mitigate the cost of those estate taxes? Well, the government's going to get that money anyway, right? And they need the money within a year. You drop dead, your estate taxes have to be paid within a year. So, and sometimes to avoid a bad decision, to raise that money, we have to be creative. And those bad decisions could be one, going to a bank and taking out a high interest loan to pay the government. Now, that's not ideal because that's going to saddle the business in the future with high debt service at not a favorable rate. That's not what you'd want to do, passing on the business to your heirs and beneficiaries. Number two, to raise some money, you might take on a business partner and sell some of the business to. But these people are wolves. They know you need to sell. They're going to dictate their terms, and they're going to insist you sell the business at a discount to what it's worth. And this whole the need for cash has nothing to do with the profitability of your business. It has to do with the one triggering event of you dropping dead. Now, how do we mitigate this? Well, the one product, the one financial product out there that's guaranteed to pay money, to pay off when you die is life insurance. So we like to use life insurance as a vehicle to pay that estate tax, right? So how do we do that? Well, we forecast what that estate tax is going to be. We try, it's not an exact science. We create an insurance policy with a death benefit that can pay that one-to-one. And what's great about the insurance policy is that you're not putting up $100 of premium to get $100 of death benefit. You're putting up much less in premium to get that death benefit over time. Now, you could drop dead tomorrow, not pay much premiums, and the estate tax is covered, or the estate tax is covered over time if you've lived 20, 30 years. But the great thing is that that life insurance is out of your state. When it pays income taxes free, no income taxes, no capital gains taxes, no estate taxes, triple tax free. Great. And it's an asset. So if any time that you start planning and buying a policy, paying the premiums into an asset, you decide, let's sell the company. Let's, do something else with the company. It's doing really well. Maybe you took on those partners, you got the cash, whatever it is. You have this insurance policy. That's an asset. It's not a sunk cost. You can access that. That death benefit is still there. It's not tied to the ownership of the company. So if plan B happens, this is still around, which is great. So from that standpoint, I hope this was educational for those that own businesses or those who are interested in the situation in estate planning. This is hopefully that this also was helpful. This is part of why we exist, and part of our firm's culture at Triathlon Partners is to engage, is to educate, is to empower our clients to make a confident decision that best fits their objectives. Well, thank you for tuning in. And if you thought this was helpful, please leave a comment below. Check out our website, www.triathlonpartners.com. Reach out and engage with us so we can help you in your specific situation, as well as we love our stuff at Triathlon Partners, right? I love these acronyms. So we love subscribers. We love thumbs up. We love friends and followers. So please, if you found this helpful and you enjoy these videos, please go to our social media sites and click those buttons. Yep. Thank you again for tuning in. Have a lovely, wonderful, and blessed day. And please stand by for the very exciting disclaimers. There we go. Take care.